TheTraderGuy.com Technical Analysis.
Hi, this is Chris from The Trader Guy, looking at a fairly simple trading system. This is the Stochastic Oscillator Crossover System. This is not to be confused with the moving average crossover system, although it works very similarly. The stochastic oscillator is typically used in range-bound markets where there is no really significant trend one way or the other. One way that you can look at that is to pull up a chart and perhaps insert a moving average, maybe like a 100-day. This is a daily chart, and you can see that we're not really going in one direction or the other, not convincingly so. So as I delete that, you can make out that there is roughly an area that looks like at least this area is consolidation, if not this. Either way, you don't have a steady trend. And that's where the stochastic oscillator tends to be more useful. So having said that, the crossover is the signal lines on this stochastic oscillator, and I'm just using a 533. That's the normally the default parameters, and these lines will actually show varying amounts of overbought or oversold conditions. Now, without going into the mathematics of the indicator, you can see that there is the 80 and the 20 level, and those are the boundaries of areas. For example, 80 to 100 and 0 to 20 that make up the outer ranges. So once you get into the outer range, you can consider it to be in an overbought condition. This is especially true when you get a crossover. In this particular case, the red dashed line crosses over the blue, and right there at that crossover, it starts to show signs of overbought. You can see that we crossed over in the middle, but you tend to ignore those, but we crossed down here. And in this area, we got the signal, and then eventually we crossed over right here on the edge, right here. And you can see we go back and forth on and on. So as it crosses over, that's a sell signal at the top and a buy signal at the bottom. The idea is that the market is going to do a lot of that. With this being the case, it does tend to lend itself to scalping as well on shorter time frame charts, but it works the same. So for simplicity's sake, I'm just going to simply ignore that here. You can see that we did get a crossover here, which coincides roughly with here, and we went up higher. We crossed over in the middle, started dropping again. That could have been a signal to get out. You're starting to notice a lack of momentum and a downturn in the oscillator. But even if you took that signal and you lost and had to re-enter down here, you're still talking about a move that, quite frankly, you didn't get out of till you got over here, because we didn't really cross above there. So when you look at this, you had a positive trade here, a positive trade here, and a positive trade here, followed by a negative trade, and then a positive trade there. So you can see how over the course of time it does work. Now, in a trending market, it's absolutely useless because overbought and oversold are relative terms. So if I zoom out here, you can see that when we were trending down, that this indicator really wasn't doing much for us. And when I insert, just that same moving average, you can see that we were trending up, and therefore the indicator really wasn't much use. When we rolled over, and for those of you who have seen the moving average system video, you'll recognize what I'm doing here. The 50-day started to slope downwards before the 100, obviously. And at that point in time, you're talking about this area down here. So you can see that as we rolled over on the average, the indicator became useless. And then you use another trading system. Again, this is for range-bound markets, but here in the Euro Kiwi, for some time, as I record this, we would have really been well served by using this indicator. This area right here alone would have done fairly well. These areas here, we still were sloping a little bit down on the indicators of the moving averages, so didn't quite perform as well. But again, this is another tool in your toolbox. Stochastic oscillators come with most trading platforms, not just MetaTrader 4. And again, I don't feel the need to change the parameters. You can tweak them if you choose, but at the end of the day, it all means the same thing.